A $6 trillion black swan is threatening the economy in 2024. Today I'm going to discuss how this is going to take shape and how you can protect yourself as an investor from this coming threat to markets and to your portfolio. So what is a black swan event? Black swan events are unpredictable events that come as a surprise to everyone, but that can have major repercussions in our economies, toppling down the whole system. By their very definition, it's impossible to predict a black swan event. Black swan events only make sense in hindsight once we've been able to rationalize them. This is to an extent what happened in the 2008 financial crisis, where the process of securitization and collateralized debt obligations kind of eventually toppled down the whole housing market, which eventually led to a global credit crunch and recession. Another example of a black swan event was, of course, the COVID pandemic. Even though there were some signs, no one really in the 6 months prior to the COVID pandemic was talking about the possibility of a global pandemic that would shut down our economies. Now, of course, the two things that these events have in common is that when something like this happens, an unpredictable shock to the economy, we often see markets take a very big hit. So as we're into 2024, and the stock market is making new all-time highs, I'm going to talk in this video about a potential black swan event that could hit the economy in 2024. This $6 trillion black swan could threaten to undermine the whole banking system in the US and from there expand onto the whole economy and even the whole world. Now, the reason that I see this as a potential black swan is because, in fact, this was a threat that we already saw in 2023. And a lot of investors think that this threat has abided, that the Fed got things under control, but this could actually be pretty far from the truth as we go into 2024. And of course, the huge risk that I'm talking about is the potential collapse of commercial real estate, which will in turn take a very heavy toll on banks, especially regional banks, and which of course could then translate into the wider economy, much like it happened in 2008. So what's up with commercial real estate? Let's look at where we've been over the last 9 months. It's very hard to get a big picture of commercial real estate. It's not really a homogeneous market. However, the Fed does provide some data on what it considers to be the commercial real estate market. So by the Fed's estimates, we actually saw a rebound in the general price levels of commercial real estate in Q1 and Q2 of 2023. However, as I mentioned before, this data is kind of unreliable, and of course, not all commercial real estate is created equal. One of the hardest hit forms of commercial real estate was, of course, office space. According to recent data, vacancy rates reached about 20% in the second quarter of 2023 for office real estate. And according to the same study, commercial real estate prices actually fell by about 20% in 2023. This was actually calculated through capitalization rates. And according to this forecast, we should still see another 5 to 10% decrease in values in the next year. Fundamentally, it's just hard to picture how much of this commercial real estate will return to its pre-pandemic value. The way we do business has simply shifted from a fundamental perspective. Even those companies that are trying to get back into the office are doing so at a reduced rate with a kind of hybrid remote work model. The need for a lot of this commercial real estate is basically non-existent as our lives continue to move online, something which was accelerated, of course, by the COVID pandemic. But of course, real estate, as we learned in the 2008 financial crisis, is intimately linked to banking. And unfortunately, in today's world, everyone has to have a bank account. So that is, of course, also intimately linked with our own well-being and the well-being of the general economy. According to regulators, there's about 1.2 trillion in commercial mortgage debt set to expire in 2025. Of course, 1.2 trillion is only the amount that is set to expire in 2025. I began this video talking about a $6 trillion black swan, and that is of course the total amount of outstanding commercial real estate debt. Now, we're all familiar how regular mortgages work. However, what's interesting here is that there's an added risk in the commercial real estate sector because of how the loans are structured. Sound familiar? So basically, a lot of this capital is tied up in what we call CMBS loans. So, according to MarketWatch, CMBS loans are popular because they typically shield an owner's personal wealth and other properties in the event of a default, making it easier to walk away. During market upswings, these loans often also include borrower cash outs. Let's break this down. So, not only do these loans limit the borrower's liability, but they also give them the ability to cash out, which is like drawing out equity. An investor who has cashed out is a lot more likely to walk away from a property and stop making payments, therefore greatly increasing, in my opinion, the rate of default on these loans. So, how does this play out exactly? Let's say we enter 2024 and commercial real estate fails to begin to pick up. Defaults increase, and who bears the brunt of all these defaults? Of course, the regional banks. Now, regional banks are still under much pressure from the higher interest rates of 2023. As we know, they have a large amount of unrealized losses on their portfolio, and regional banks were actually already in trouble during March of 2023 when the Fed had to step in with its bank term funding program, a program which is, of course, going to be ending during the next couple of months. According to this report, defaults on commercial real estate could reach about 10 to 20%. That's equivalent to around 1/4 of the average assets held by the average bank. At best, we have a slow bleed in the real estate market, which might lead to some orderly defaults. At worst, however, this could trigger a credit contagion, and we're talking about a situation not unsimilar to what we saw in 2008. Without a doubt, the Fed would likely be compelled to act. They might actually extend the bank term funding program, and this is very likely given how often we've seen the Fed introduce extraordinary measures which have ended up basically just becoming common practice in our general monetary system. However, even if the Federal Reserve does step in, we must understand that the Federal Reserve isn't an all-powerful entity. We already saw that even in 2008, with massive stimulus, they couldn't stop the massive decline. Of course, they may have helped in a recovery, at least a recovery in equity prices, if not a recovery in the general economy. But nonetheless, we still had many years of unemployment and a lot of hardship for a lot of people. The same can be said back in 2020, of course. Even with the massive stimulus from the government and from the Federal Reserve, we still saw stock prices decline sharply during those days following the COVID lockdowns and all that stuff happening there. And of course, we saw a huge spike in unemployment. So, in short, there's 6 trillion in commercial real estate debt outstanding, which threatens to undermine the regional banking system. Collapse in commercial real estate leads to a collapse in regional banks, which in turn leads to a national credit crunch in the US and basically eventually bleeds into the real economy. Of course, as these banks begin to collapse, it doesn't only tighten credit, it actually means that a lot of people and banks will be defaulting on their loans, not being able to make payments, and so on and so forth. Eventually, it won't just be the regional banks caught up in this mess, but of course their clients, and of course the whole economy. So here's the key. How do we prepare for this situation? I propose here 3 possible strategies that can help you defend your portfolio and prepare for such an event, or many black swan events for that matter. First of all, and of course this has been a very unpopular trade in 2023, but it is now set up very nicely going to 2024. Long duration bonds. Of course, the 10-year and 20-year treasury bonds had a terrible 2023, but I believe that now long duration bonds are set to go higher. In other words, I expect rates to go lower. This is based both on my technical analysis, but also on the idea, first of all, that the Fed has already told us that they're going to begin cutting rates. And secondly, of course, the idea that this rate cutting would greatly accelerate if there was a credit contagion. Of course, ultimately, the long duration bonds have acted as a flight to safety, and I would expect that to happen again here if we did have a credit crunch. On the other side of the spectrum, the other way we would defend ourselves is, of course, Bitcoin. And now, I understand that it doesn't make a lot of sense maybe to a lot of people to talk about investing in long-term government debt and to invest in Bitcoin. Oftentimes, the people investing in these assets have some very different ideas of how things work. But nonetheless, I'm talking here strictly of how to protect your portfolio from a black swan event in 2024. And I believe Bitcoin has a proven track record in this regard. I know, right? An asset that is only 10 years old is going to act as a hedge. Well, we already saw this happen in 2023. Just look at this chart. As we can see, back in March of 2023, when we had the regional banking crisis, we saw Bitcoin really begin to take off. Now, again, don't ask me to speculate on why, but definitely the idea that it could act as a hedge, or perhaps that it was basically pricing in higher amounts of liquidity in the future, definitely could have something to do with it. In any case, I believe that if we saw credit contagion that can affect banks, of course, what has presented itself over the last 10 years as an alternative form of money might actually gain a little bit of attraction. And last of all, and maybe not so much a hedge against this event, but rather a reaction play, so something you want to do as the economy maybe is ready to recover would be to buy large banks. Now, ultimately, I do believe that the stage is set so that over the next few years, the US banking system becomes a lot more centralized and more concentrated into a number of large banks. So, a regional banking crisis would, of course, contribute to this, and it would be a perfect opportunity for the larger banks to buy their assets to basically assimilate these banks at fire sale prices, which ultimately, even though these banks are also going to be hurt by the more immediate crisis, they can do very well by absorbing these smaller banks and will eventually, of course, attract the rest of the capital. So, to wrap up, potential black swan event in 2024, collapse of commercial real estate, which leads to a collapse in regional banks, which eventually translate to the real economy. How do we protect ourselves from this? Long duration bonds, Bitcoin, and possibly large banks. Of course, there are also many other assets we could discuss, such as gold, but I'm not going to do this in this video. For now, guys, I really hope you enjoyed this video. If you like this type of content, I highly recommend that you check out my Substack. I write about the economy, macro stuff, in-depth stock reports every week, and I do that on my Substack. The link will be below. Thanks again for watching, and see you in the next one.